Good evening and welcome back to Be Rich. Today we want to discuss the state of the international markets, and this is true of the Indian markets also. In fact, Indian markets are more euphoric than world markets. If people say that the US market is euphoric, then the Indian market is more than euphoric. It's at top. The American market is at this point 10% below the peak, whereas the US or the Indian market is almost within touching distance of the peak. Now, we have what is known as a volatility index in America, both for the bond market and for the equity market. What are the volatility indices telling us? The volatility index is also known as a fear gauge. So I will allow Sashwath to explain to you what is a fear gauge and why is it called a fear gauge. And finally, the one point I wanted to make it is when the article we read together in Economist, it talked of two cute animals. One is a marsupial, only found in Australia, and another a very common porcupine, which is there in India and Africa and across the globe.
Porcupine.
Porcupine. So, what? How does it relate to these two animals? What is a fear gauge? What's happening in the markets? Please explain, Sashwath.
So the volatility index, which he talked about, is an index which the cost of ensuring volatility in the equity market. So if there's a lot of volatility and there's a lot of fear in the market, the volatility index goes up because that's the cost of insurance, and it makes logical sense that when there's greater perceived risk, the cost of insuring goes up, and therefore your volatility index costs more. That being said, in very recent times with the S&P 500, which has been almost touching distance of its all-time highs, what has happened with it is that the volatility index is at an all-time low. Not an all-time low, but it's definitely declining. So the volatility index tells us that equity investors are euphoric in the US. And we'll talk more about why they're euphoric, but when it comes to that, people are underestimating the Fed when it comes to interest rates and their rate hikes, which have been happening over the past year. Because initially, yes, the market was quite fearful, but as of late, the volatility index says otherwise. And it's a fear gauge because, as I said, it's perceived risk in the market. And number two, you have your bond market insurance. And this tells a different story. This is considered the porcupine story, and the porcupine is considered an animal which is inherently safe and wants to preserve what it has. And it depicts bond investors very well because their entire strategy is to live to fight another day. And when there's danger, the porcupine turns up into a ball, has spikes all around, and it survives whatever predator. And that's exactly what bond investors are looking to do. So when you look at bond insurance and bond volatility, it looks to be up. And the bond investors are not underestimating the Fed, nor are they underestimating tough times ahead. Whereas equity investors are very euphoric, as my uncle had previously said.
And
And the reason why the coca is used is because
the Australian animal is called coca.
coca, yeah, it's used because it has a very happy face, and it's supposed to represent optimism and good times to come.
I think this looks very funny to me. It's not even 2 months since three banks in the US cracked. Two
Yes.
banks clashed, and one bank had to be rescued. And all three banks, the Fed took responsibility for all the
For viewers
deposits.
at home, he's talking about SVB, Silicon Valley Bank, and First Republic.
And the all the money deposit was returned to the investors. And today, Jerome Powell is saying that he will increase interest rates at least twice. And I read a lot of generic manufacturers, small generic manufacturers in US have gone bankrupt. So interest rates are going up. And interest rates, like Buffett famously taught us, acts as a gravity on
Stock prices and
profits. And so when profits go down, automatically stock prices have to go down.
Yes.
And core inflation is very steady at 5.3.
And let me just quickly explain for those at home why interest rates acts as gravity for profits. One, lending costs go up. With your interest rates rising, it becomes more expensive for your corporates to borrow, and interest payments end up becoming more expensive for these corporates. One. Number two, consumption on borrowing, which has increased exponentially after the unveiling of credit cards and the mass use of it, and EMIs. What has happened now is that with your interest rate going up, you'll think twice about purchasing something on EMI, you'll think twice purchasing something on credit card or borrowing money as a personal loan in order to consume. You may not buy that car which you always wanted to buy or thinking about buying. You may not buy that house which you've been thinking about buying. So this means that corporates are now getting less sales and there's less economic activity. Things are cooling down, as economists say. And when things cool down, corporate profits go down. And why do you think stock prices go down? Because profits are going down. Even if your PE stays the same, for it to stay the same, your price has to come down when profits come down. Which is why when my uncle says that interest rates act as gravity, that's exactly the reason why prices go down when interest rates go up.
And so if you have going to have a couple of
Rate
rate
hikes.
hikes, and that's a 0.5% interest hike, that means a lot of demand is going to go down the tube.
Yes.
And therefore, corporate profits are going to be hurt,
Yes.
and therefore, stock prices have to come back to reality.
Correct.
So short from a big bank run, you are having markets go gung ho,
Yeah.
means there is too much liquidity sloshing around, and the Fed has to continue tightening the balance sheet, not only by increasing interest rates, by whatever bonds that are maturing, they are not buying back new bonds. That means so much money is going out of the system.
Yes.
That has to continue for some time. And the size of the American balance sheet has to come down before the America can hope for a big stock market rally. So definitely
When you talk about America's balance sheet, you mean its debt.
its amount of money in circulation has to come down. And that can happen because there's a huge pile of bonds lying with the Federal Reserve.
Yes.
The Federal Reserve is not selling those bonds. What it is doing is when whatever is mature, they are collecting the money and not buying bonds again.
Yes.
So the amount of assets with the federal bank is coming down, and amount of money in the market is also coming down because they are just taking the money and extinguishing it.
Yes.
Therefore,
And because of fractional reserve banking, extinguishing $1 is like extinguishing $10.
exactly. So what this rising stock market says is there is enough liquidity on people to gamble further. Unless that liquidity stops, you are not going to have a proper deleveraging of the American economy.
So what he's trying to say is that because there's so much leverage in the American economy from quantitative easing, where the Fed has started buying bonds during the COVID period, there's a lot of money sloshing around. And now the Fed, by raising interest rates, has tried to suck all this extra money out. But what he's trying to say is that this S&P 500 rally is telling us that the Fed is not doing enough, or it still hasn't achieved its intended effect of taking that extra liquidity out. And because the economic activity is still buzzing, low unemployment rates with jobs still being added, that means that the Fed still has a lot of work to do in terms of interest rate hikes. Is that what he's saying?
Yes, and I suspect it will be more than the two. If they are serious of bringing it to 2% and
Yeah.
inflation to 2%. So the chances of recession in the Western world just got brighter.
Okay. And so now what he's saying is that because of all this extra liquidity sloshing around, Powell is not going to be blind. He's not blind. He has a team of data scientists and he has a very talented team of people working under him, and all of them can see what's happening in the market, and that cannot be ignored. And this S&P 500 rally is like a self-fulfilling prophecy, because as the market rallies, what will end up happening is Powell will see this. He'll see that the US economy is strong, investors are hunky dory, and what Powell will say is that yes, I have room, I have leverage in order to be able to increase rates even more without the. Powell's biggest worry right now is that the economy is going to tank.
Yeah.
But from what the S&P 500 is telling Powell is that, boss, you keep raising rates, nothing is going to happen to us, we're good to go. So Powell will see this and he'll rate.
I read an article in the Financial Times, which we'll discuss tomorrow if you have time.
Yes.
There are only 7 stocks which are driving the S&P 500.
Yeah.
These are all
AI stocks.
AI stocks.
Yeah.
The rest of the index is not going
Laggards.
anywhere.
Yeah.
So if this AI story narrative stops, you will have a bigger impact on these
S&P 500.
S&P 500. Anyway, let us wait and watch. Thank you for supporting Be Rich. Kindly like this video, and whatever comment you would like to write, please write below. Please subscribe to our channel, turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support to Be Rich. I'm in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.